It was an amazing performance over the weekend, but the stocks also already had an amazing performance, Bill, even over the past several weeks on the heels of the announcement, or the anticipated announcement, really, of Disney Plus. How much more room is there to go?
Well, there's two ways to look at it. I agree with you that it's had quite a run in the short run, and so people should be really careful chasing the stock in the short run. On the other hand, if you look at the chart over the last 3 or 4 years, the stock had been extremely quiet as investors perceived that the technology companies were threatening their audience and their past dominance.
And so you look at the stock right now, we're looking at $142 a share. What's fair value?
Well, here's how we think about it at our company is this is one of those really great companies, right? There's maybe 20 of them. I think the Starbuckses and the McDonald's and the people like that fall into this category, the Costcos of the world. Most of those dominant companies that have the enduring moats and the brand so closely tied with multi-generations, most of them all trade at 25 or 30 times earnings in here. And I think that people are looking at the 20 multiple compared to the way Disney traded the last 2 or 3 years and saying, gee, this looks high. But again, I think Charlie Munger's been talking a lot lately about own an outstanding business at a reasonable price. And I don't think 20 times earnings for the future that Disney has is unreasonable at a 2.5% 10-year Treasury.
Bill, big headline late last week was the future of Hulu and the ownership structure of that, including a debate about whether the parent company of this network, Comcast, should sell its 30% stake back to Disney, and the sort of machinations and thought process over at Comcast about whether they should ride the wave, if you will, and whatever is going to happen between Disney Plus and ESPN Plus and the packaging that Hulu Plus or Hulu will get with that, or whether valuations for some of these over-the-top services, including Netflix, may have peaked, and whether you want to sell now. If you're Comcast, what do you do?
Well, first of all, I think you need to look at these companies within a very long-term context. So what I remember is you had the broadcast networks, and then cable and VCR came along, and people were afraid that that was going to ruin Disney, for example, and cable came along, and what ends up happening, regardless of what you do with the distribution system for entertainment, it always comes down to content. Who's got great content? In Comcast's case, they have a lot of great content also, but they also have the pipes for high-speed access. So we remember talking to the investor relations folks 3 or 4 years ago at Comcast about net neutrality. And they said, well, where do you guys come down on this? Shouldn't you be charging the people that are pigging up all the spectrum at 7 o'clock at night, like Netflix and YouTube? Shouldn't their customers be paying a lot more than the normal people that are using access all day long at less traveled times? And they looked at us and said, we don't care, because we're going to get people coming or going. I'm paraphrasing. So Comcast is in a great situation because they control an awful lot of content and ability to create content. And then secondarily, if Netflix wins the game, Comcast wins the high-speed access game at the same time.
But what does it say, though, about valuations right now for content plays, specifically OTT plays? Looking at the valuation of Netflix, we have it on the screen right now at $374. Obviously, the value of Hulu has jumped literally billions of dollars in the past 6 months alone. And so the question is, if you're Disney, are you paying top dollar to get people out now? If they were going to actually buy Comcast out right now, would you want to wait? Where do you think the valuations for these things are going to be in several years from now?
Well, we believe we are in a financial euphoria period for the technologies that people are excited about right now. For example, you mentioned Netflix is depreciating the content they create. They're a platform, right? Netflix is a platform the way Macaw Cellular was a platform. Did Macaw Cellular buying them by AT&T make AT&T rich? The answer is no. It made Steve Jobs rich because Steve Jobs unlocked the cell phone in a way that no one else had unlocked it. And the platform continued to exist, but that's not where people got wealthy. We question Netflix because they're creating content in a what you'd call a fits and start manufacturing process that has no history and does not have the brand ties in the multi-generation that a Disney or a Universal would have at Comcast. So we think people are giving the people making scripted TV and movie content outside of people like Disney and Comcast are like drunken sailors on leave throwing monies and actors and actresses, and they're going to have heartache, we believe. Ultimately, investors will have heartache from believing that that will work, because if you look at the history of movie and TV studios over 100 years, most of them fail.